let's look at the big picture of the financial markets. First off, read this disclaimer carefully. So let's, in this video, focus on the green numbers, because there's a bunch of markets that are crashing, so the green is really what sticks out. So let's actually look at the best performers of the entire newsletter. And then we have to go all the way to this section. So you can see that in this list, the leveraged products, they dominate. That's obviously because of the leverage effect. So the strongest performer over the last week is Energy Bull 3X, 727% gain. Over the last month, Volatility Bull 2X ETN has returned 332%. That's huge. Year to date, the same ETN, 543%. That's pretty huge. Over the last year, you can see that the oil and gas bear minus 3x, so this is a bearish ETF, 453%. That's huge. And Paysign is the highest performing over the last 3 years at 930%. But I also have this list here where I exclude the leveraged exchange traded products. Then you have Frontier Communications, highest performing at 52% over the last week. The Volatility Index, 118% over the last month. Year to date, Volatility Index at 341%. That's pretty darn impressive. Over the last year, Shifty Pixie is the highest performer at 316%. And Paysign is the highest performer over the last 3 years here as well. So let's start going through and look at some of the green numbers. So here is the stock market overview. So a sea of red, the only green thing we see here is from the volatility index. Some of the comparatively smaller losses have been, from example, the Nasdaq at minus 13.55% year to date. But still, that's pretty darn red. Here are the country ETFs, all kinds of different countries here: Northern Europe, Southern Europe, North Asia. North Asia is best performing year to date, but you see that there's a sea of red, not a single green item year to date. Here is the doom and the gloom portfolio. So here you have the short ETFs and the long gold. The year-to-date average performance is 22%, so the bears have had a pretty good time. So yes, there are always opportunities. Here is fixed income. The biggest winner here is the 20-year treasury bonds at 20+ percent gain year-to-date. Also, the 7 to 10-year treasury bonds approaching 9%. A lot better than the stock market. Here's the Forex market. The dollar has strengthened quite substantially. So in this entire category here, the US dollar is base, meaning on average, the dollar has strengthened 12% year to date against these currencies. The very interesting exceptions would be Hong Kong dollar here, and also, yes, it is stronger against Chinese yuan, but not that much. Here are natural resources, gold in the green. You also here have rough rice. You got wheat, you got soybean meal. Orange juice is the strongest performer. The problem with orange juice is that you have to go into the futures market, unfortunately. But maybe if there's like a big demand, people will want an ETN maybe. Here are some specific strategies. You got like beta, sophisticated. The market neutral is the big winner here. You got the anti-beta ETF and the Market neutral momentum, the MOM, ETF performing almost 20% here. Next, we go to the sector ETFs. So let's get the strongest performers. So year to date, consumer cyclicals is the highest performing, but it is at minus 18%, so that's a huge loss. Energy is the worst performing at minus 48%. That's huge. The individual winner here is the decline of the retail store ETF year to date, gaining 49%. The big loser is oil services, losing minus 67% year to date. So basic materials, a sea of red, but the precious metals ETF looking comparatively quite good. Huge win over the last week. The silver miners, both the major and the juniors, big gain. Agriculture also actually posting some greens here. Consumer cyclicals, the thing is that this is essentially a bearish ETF, so yeah, I am considering excluding it from some of the calculations because it is inherently different, even though it is an indicator of what is going on in the consumer cyclical space. This one is very interesting. It is bullish online commerce, but bearish retail stores, brick and mortar, 8.5% year to date. That's decent. Financial services, a sea of red, a disaster there. Real estate, just a sea of red, really red numbers. Average here is minus 40.77% year to date. That's pretty darn bad. Mortgage real estate is the worst performing. Consumer staples, sea of red, so no, it's not safe. Healthcare, a sea of red here as well. Utilities, supposedly a very safe sector, but no, sea of red. Communication services, red. Energy, very red. I mean, you have oil and gas, oil services, MLPs, all are like minus 60+% plunge year to date, so yeah. Here are the industrials, red all over the place, and also technology. The interesting thing here is that you see that some of the strongest performers is actually China Internet and China Technology. So that's something to keep our eye on, because China's ability to handle the virus situation is very likely to be significantly superior to the many Western countries, especially United States, and that could have broader ramifications. So here are the themes, thematic portfolios that I have created. You see that year to date, all are in the red, but there are some strong performers comparatively. Blockchain, and you can also see here interactive entertainment, not too bad. So let's look at the best and worst performers. So year to date, interactive entertainment is the highest performing at minus 3.41%. Cold value stocks is the lowest performing at minus 56%. Individually, individual companies and items, Teladoc is the highest performing year to date at 92% gain. Teladoc has benefited quite tremendously from the corona situation. Amplify Energy has lost 91%, so that is really tough. Rough times. So, artificial intelligence, huge topic. The way I have created these themes and portfolios is that I try to have it as pure play as possible, because the big problem with many ETFs is that when you look under the hood, they're not really pure plays. There's many of these broad companies that are like jack of all trades. So these are relatively purish plays, as pure as it gets. Here we get batteries and Cordas Electronics, biometrics and cybersecurity, applied DNA sciences, not too shabby, huge win recently. Blockchain, Ethereum and Monero pretty strong year to date. Clean energy. Geothermal company Ormet Technologies, the best performer. Cold value stocks. So here you can see the criteria for inclusion. I call them cold value stocks because they are value stocks for sure, but they are cold in the sense that the buyers haven't stepped in yet. However, there are some companies here that seen a significant bid over the last week. Cybernetics and Bionics. I'm very bullish long term, but there's tremendous uncertainty in this space. Here are companies that have seen devastating sell-offs, and you can see over the last 3 years the average plunge is minus 96%. But the interesting thing about these stocks is that when they move up, they can have these amazing short squeeze, like here. I mean, so you can really see huge gains fast, but they are of course extremely spicy, huge movers in both directions. Here is discount retail. Walmart and Costco, best performing year to date. Dividend investor, so here are dividend stocks. Overall, not really impressive here. E-commerce, Amazon and Shopify in the clear green. Education disruptors, Tal Education, big performer. Environmentalism, Plug Power, hydrogen fuel cells, 18% year to date. Femininity, so this is basically stuff women are into, minus 38%. Financial technologies, Virtue Financial, pretty big gain actually over the week, month and year to date. Genomics, very interesting topic, but clearly in the red. So here is the big winner, Interactive Entertainment. So you can see that the losses are more muted. EA is the biggest loser, but you have some winners here like Zynga and Glue Mobile. Internet of Things, Masculinity. So Sturm, Ruger and Company, you know, they sell weapons. They are actually in the green. And you can easily make a theory about why that is the case. And here you have the military-industrial complex. You do actually see a sea of red here, so none of these have been safe plays. But there are more themes. So here we got a bunch of others, so let's go through them. Here are the most hated industries. So you got oil and gas, coal, gambling, tobacco, cannabis, alcohol, candy. Huge loss, minus 41%. Biggest loser here is coal. The biggest winner, it seems, is Mondelez, candy. Here is nutrition and fitness. United Natural Foods, in natural and organic food category, 13%. The worst performing is Dick's Sporting Goods, retail. Which makes sense given that people are strongly encouraged to stay at home. Online video and audio. Netflix, big winner. Patient Independence, Dexcom, and Teladoc. Portable technology, Fitbit, best performing, processing of information, NVIDIA and AMD, robotics and automation, sea of red, self-driving vehicles, Tesla. I am bullish on Tesla. Here is the shit hit the fan buy precious metals portfolio. So there's been some big movers here, and also recently, so this is definitively a space to keep your eye on. Social media, space exploration, surveillance and security, Axon Enterprise, body cams and tasers, Alarm.com, The International Investor, The Rich Get Richer, So Tiffany & Company and Hermes International performing comparatively well. Here are the tiny challengers. So these are really like small companies. Orion Energy Systems, Intelligent Lighting category, 8.36%. Toxic Energy, deep in the red. Underdogs, deep in the red. We Love Our Pets. The only in the green is 1-800-PET-MEDS. Weak. So these are stocks that are weakly statistically correlated with the VT ETF. And there are some clear winners here. And here are workplace disruptors. DocuSign is the only one in the green. So now let's go to the leveraged exchange traded products. So you can see here that the volatility ETF has had some pretty substantial gains. Mortgaged REIT 2X Bull is the lowest performing year to date at -98% plunge. So these are the bullish ETFs. Unsurprisingly, they are deep in the red. Here are the bearish ETFs. Huge gains here, 89-ish%. Actually, the bigger gain here for being bearish developed markets than emerging markets. That's interesting. CF Red, these are long. Here is the short. 57% year-to-date average gain. Some huge winners. Long sectors. The bulls have gotten slaughtered. Though there's been some huge wins recently. Short sectors, huge average gain. Only technology is in the red. Here is long subsectors. Here is short subsectors. Being bearish oil and gas has been the best option, followed by regional banks. Here is long fixed income. A lot of all green. Short fixed income, all red. Long natural resources. So being bullish gold has actually worked out. Short natural resources. So being short these, it's been working out. And here is the long miscellaneous. So this is like a mix of stuff that it was just hard to create categories for them. And also these are predominantly +2 leveraged. So the volatility products, they are the ones that are benefiting from the current situation. The short miscellaneous, the only one in the red here is the FANG Plus. So you can see that the bearish FANG Plus ETF and also the bullish FANG Plus ETF are both in the red. So that's one of the caveats with these leveraged products, is that they need to be followed very closely because they can have these deviations from the underlying index. So all in all, as you can quite clearly see in the newsletter, there are some places that are performing really well. There is always a bull market somewhere if you look closely. So every week, at least for the foreseeable future, unless something changes, then I will make these videos about the newsletter public. But the safest way to be guaranteed that you will have access to the newsletter is to simply become a DiamondArm customer. As you can quite clearly see, there are opportunities. Whatever you do, of course, you want to let the trend be your friend.